through the recovery process, and it is in a situation to where that will take some time. You have a GDP situation that will take and not necessarily adjust very quickly. And with that sort of in mind, what I'd like to do is kind of walk you through just a couple different things. So Capital Economics has put forward a chart of their estimates of GDP growth by quarter through this year, now that it's revised. And if we look at the United States, you see they estimate a 12% drop in the first quarter, then rebounding to 4% growth in the third and 5% in the fourth, but an overall drop of 5.5%. Others, such as Goldman Sachs, see a much bigger drop taking place, with potentially a 24% decline in the US in the second quarter. So there's steeper drops potentially out there. There is also some estimates that this could take and lead to a new depression in the United States. If we look at the Eurozone, where Italy has been hit very hard, another major trading partner of South Korea, you're seeing also estimates of a 12.5% drop in the first quarter. But if you go down to the bottom of the chart, look at China, where this all began. You're talking about 20% decline estimated in the first quarter. And even for the full year, they're looking at potentially a 3% decline. Goldman's numbers on China in the first quarter are a 9% decline, but a 3% growth for the year. I think in Goldman's case, they're probably being a little optimistic, because if you start doing the basic math, it's going to be really hard to get to 3% growth if you have a 9% decline in Q1. So there's a lot of really significant contractions going on right now. And if we look at how this is impacting employment, globally, the ILO estimates there could be 25 million jobs lost. The US, in the last 2 weeks, we've seen around 10 million jobs lost in terms of unemployment increases. China, the estimate is that in January and February, there were a decline of 5 million. But of those 5 million, the majority of those were in February. France has seen 4 million people in March alone file for temporary unemployment. Spain, who's also been hit hard, has seen 800,000 jobs lost as well. So I want to take and sort of give you this chart, because having talked about sort of some of the initial estimates on how some of the major economies are going to be impacted, or at least what the initial thoughts are, I want to kind of give you a feel for sort of where we are. And if we look here, you can see that back on around January 23rd, that's when China first implemented quarantine efforts in Wuhan. It wasn't until March 15th that they started lifting the restrictions.
Troy,
so now,
I don't mean to interrupt you midstream, but are you screen sharing? I don't think anyone's seeing your...
Apologies, I thought I'd hit the screen share. That is my fault. All right, can you see it now? All right, so apologies for that if you couldn't see before. But so as you can see from this chart, which is based off Johns Hopkins data, the quarantine started around January 23rd in Wuhan, and then March 15th is when China began lifting some of the travel restrictions. And what we have, as you can see, is that we're really sort of at the beginning of the curve in the United States and in Europe. And you can see that orange line is the United States, where there's a very significant growth in cases of COVID-19. But you can also see that there's significant growth in a lot of the other major economies, be they either France, the United Kingdom, Spain, or Italy. And so all of this is impacting the global economy at the same time. And as we think about this going forward, I think there's a series of issues that we need to sort of view this through. The first is the initial supply shock in China. We've seen this in Korea, to where auto production was down about 27% due to supplies not being able to get into the South Korean market. But going forward, the biggest issue is going to be, I think, the demand shock. As we see unemployment rise, as companies become short on cash, as they start losing customers, as we all move into this stay at home or stay in place mode in the United States, in Europe, and other countries. you have a situation to where demand is going to drop significantly. And we've seen this, either in the United States, think about things like now movie theaters are closed and essentially Disney has stopped, for example, reporting its box office because there's essentially no box office to report. Right across the street from me, there is a small shopping mall. About half the shops have closed. The parking lot, when I look at it during the day, is significantly declined in terms of just traffic itself. So you have this demand side shock to where people aren't going out and buying the types of things that they might have bought before. If we look at this more globally, even setting aside the price war between Russia and Saudi Arabia on oil, you're seeing commodity prices decline, and those are going to continue to do so. That, along with the flow of US dollars out of developing markets, is going to impact much of the developing world, which is also going to slow global growth more broadly. And the challenge that I think we all face here is that as demand dries up, as we have these significant contractions, we're seeing governments take, and in the United States, there's been, the $2 trillion stimulus package, which was the third out of three, but the most significant. As you see similar packages come through in the United Kingdom, Germany, who has declared that they will use a bazooka to try and deal with this, massive fiscal stimulus put in, but a lot of this stimulus is also on the loan side. And we run the risk of a situation to where as business dries up, companies aren't able to service loans, and this eventually becomes a financial crisis as well as one of demand and one of the virus itself slowing down the economy. And when we look at sort of the cooperation level between on the G20 and the G7 level, the G7 process was basically disrupted in terms of putting out a statement because we couldn't agree on what to call the crisis, essentially. The G20 was able to move a bit further forward. There are efforts to try and do debt relief for some developing countries. There's a package being put together for Africa, but we're not seeing the type of coordination that we saw during the global financial crisis from the G20, or even during the Ebola outbreak when there was specific coordination with the G20 in terms of medical supplies and other aid to the region in Africa that was being hit. So right now we have, more challenges in terms of international cooperation to try and deal with this common economic and health threat that we're all facing. But the larger question I think we all face is whether there is going to be a V-shaped recovery or we're in for a longer decline. When we look at the numbers right now, the hope of everyone is that there is going to be these significant drops, but that we will be able to essentially reboot the economy very quickly. If you look at prior viral outbreaks, that has been the case. If this one goes on that way and follows that pattern, we should be able to do that. You will still see overall perhaps declines in growth in for the year-on-year average, but you would have then strong second half growth with first half growth being negative. The challenge I think is that the longer it takes to get the virus under control, the more likely you're going to have these other types of issues, such as, more businesses being shut down, more likelihood that there are financial issues that come forward and that we turn this into a financial crisis as well. And that is really sort of the situation that we're in right now, whether we can get the virus under control in time to try and take and reboot the economy quickly, or whether this becomes a situation to where we're in this for a much longer period of time. And with that sort of context now, knowing that you're going to see declines in trade, I think when you look at the numbers that have been out so far right now in terms of even just U.S. Korea trade or any others, you're not quite seeing some of the shock yet. But if you kind of look below the surface, even on the U.S. Korea numbers, you can see that from the numbers that were released early in the month and then how it went from a positive increase to a small decline, that really in the second half of the month, this really started to hit. And I think April and May, we're going to really start to see these numbers change. And with that, I'd like to turn it over to Kyle for a more detailed discussion of the U.S. South Korea side.
Thanks, Troy. I couldn't ask for someone to set this up better than you have. And thank you also to AMCHAM for hosting Troy and I to have this very important discussion. Looking forward to your questions afterwards. So I'll start my screen share. Okay. Right, so I'm talking a little bit more about the impact specifically on the U.S. Korea relationship. So I'll be looking a little bit on how this impacts, the U.S. and Korea separately, and then getting into the bilateral relationship. As Troy said, there's a lot of uncertainty so far, and I expect that to carry through, as does most of us through the rest of the year. I know Troy mentioned some of the GDP numbers and was talking about the US, but I've sort of seen those reflected in Korea as well. You know, we came into this year expecting South Korean GDP to be somewhere between GDP growth between somewhere to 2 to 2.2%. And we've seen that slowly degrade with conservative estimates right now at 0.5% is contraction all the way up to 6% contraction. But these numbers keep getting worse and worse as the days go by. So there's really a lot riding on the line for both the United States and Korea. And breaking it down by both countries, I thought I'd first talk a little bit about trade. So trade for Korea matters much more for Korea than it does to the US. So trade is about, exports are about 40 to 45% of GDP for Korea, and for the United States, that number is around 10 to 15%. And this March, exports did go up by 0.2%, but as Troy said, the numbers were much higher in the first half of the month and then had this precipitous fall in the second half. And there was a pretty steep decrease in value, which was more than a little offset by the increase in volume. So it was about a 13% increase in volume and 11% decrease in value. And sort of where the increases went up was actually to the US. The US exports to the US went up by 17%. We saw a big increase in autos and chips and machine parts overall. In exports, there was a big increase in autos, computers, biotech. And then the losers, the ones that had contracted, are actually some of Korea's biggest and most important industries: semiconductors, petrochemicals, and shipbuilding, and ships. So there's the U.S. was able to buck the trend a little bit, but overall, I mean, there are some worrying concerns about the overall export numbers for Korea. And as Troy mentioned, we should expect to see in April and May these numbers to fall a little bit further. Now, for the U.S., exports actually shrunk by 0.4%, and the deficit has actually fallen a lot. I know this is something that has been really important to the president, and it seems as if the coronavirus macroeconomic factors, as we all have been sort of saying for a while, have a much bigger impact on the trade imbalances than do bilateral trade agreements themselves. And we're starting to see that right now. And Korea, imports from China were down by 5 to 6%. And for the United States, they're actually down by 31% over month-to-month and year-to-year period. So there's a huge drop in the amount of exports that China is sending to the United States. It's actually at its lowest point since 2004. On the financial side, Korea and the United States, no surprise, have been fairly big losers in terms of the stock market, down around 20% each. But the Korean won has dropped about 6% since the start of the year, and the U.S. dollar has actually gone up by different amounts depending on which currency you're comparing it to, which brings its own challenges of dollar appreciation, especially right now, as a weaker dollar would really help as we try to push through fiscal stimulus, which I'll get to right now. So for the United States, the government response package was about $2 trillion, or about 9% of GDP. And I put down here helicopter money. You know, most of us in the U.S. know that we may be accepting or getting a $1,200 check in the mail pretty soon. Some of us more, some of us less, as a way to sort of help cope with the virus, cope with the economic effects of the virus. And then there's also a $500 billion corporate relief package, which includes loans and investments possibly to some of the hardest hit companies in the United States. Korea, on the other hand, has taken a much more targeted approach so far. An $80 billion bailout package, 5% of GDP, which is maybe not so much a bailout package, but a fiscal stimulus package, targeting SMEs, retail for the financial market, low-income families, medical care, and child care. On the financial market side of things, they haven't really targeted big business the way that the U.S. has so far. But there are there are probably ways in which they're going to have to. So as part of the financial market efforts, they've offered about 20 trillion won to buy risky corporate debt this year. And that's probably not going to be enough. About 2.3 billion of Korean airline stock alone, or bonds alone, are maturing this year, and they're probably going to need a lot of that help. So that's about a quarter of what they've already allocated. So I would imagine as the crisis gets worse and other parts of the economy get hit harder, I would imagine they would have to increase this spending here, especially chaebol are so structurally important to the Korean economy, and so much of them are dependent on outside sales. Samsung Electronics, for instance, the largest South Korean chaebol, had $186 billion in sales last year, and only 15% of that came from South Korea. So there's probably going to be a lot more money in the coming weeks and months that are needing to be rolled out to help not just SMEs and low-income families, but also these big corporate chaebols, which we'll see how that really unfolds after the National Assembly election. Moving on to consumer confidence. As you can see, consumer confidence in the U.S. and South Korea has really dropped in recent weeks and months. So on the left side, the Bank of Korea Consumer Survey Index, where anything above 100 means positive consumer survey outlook. Anything below 100 means negative. And you can see in March there's a huge drop, even though that there was a big spike. I think about 9% increase in retail this past month. But a lot of that was actually in online sales, and there's winners and losers in that as well. But I think the sentiment seems to be that that 9% increase isn't going to last for too much longer. As you can see, there's a big drop. And then on the right here, you see the United States, where we are at this little drop over here in the right corner. That's where we are right now. And it seems as if we're probably, are we closer to a 2009 scenario, or we're closer to maybe a 2012 scenario where we see the small drop here and not necessarily a big GDP contraction. But as Troy mentioned, there's really a lot that could potentially go wrong over these next coming weeks and months. So it seems as if we're probably in it for a big drop on consumer confidence in the coming weeks. And now to look at more of the bilateral relationship, obviously we have been hearing a lot about the services side and how tourism travel is really going to disproportionately impact Korea and the United States, but also the U.S. is a big service provider, so that's going to hurt the U.S. too, all these social distancing efforts. But also in terms of merchandise trade, if you look at data put together by our sister organization in Korea, the Korea Institute for International Economic Policy, this just came out recently. They looked at the impact of U.S. imports, looked at the impact of H1N1 on U.S. imports, and you can see a drop here, starting with the bankruptcy of Lehman Brothers, the 2008 financial crisis, but then really prolonging the recovery with the H1N1 preventing a rise in imports. And then really it was only until the vaccines were administered did we start to see a rise in imports again. So we really could be in this for a while until we find a cure to all of the disease that's been spreading. Now, one of the most successful areas of cooperation between the U.S. and Korea right now is on the monetary side, between the Federal Reserve and the Bank of Korea. And if you can see here, going from bottom to top, we really have strengthened our monetary cooperation over the years. In 97, 98, there was no bilateral facility set up between the two countries, and Korean FX reserves, foreign exchange reserves, were $9 billion against the $65 billion short-term external debt, which is really why they took on the large $60 billion IMF loan at the time. Fast forward to 2008, South Korea gets a $30 billion currency swap facility from the U.S. And if you also see that second bullet there, from March to September, there was about a $60 billion sell-off in FX reserves to help buttress the won. It was quickly depreciating. But then the U.S. stepped in, offered the swap facility. Korea only accessed about $4 billion of it, and really helped save a free fall from going even further. And now in 2020, the Fed and the Bank of Korea have initiated a $60 billion currency swap facility, which the Korean government has just access to 8 billion of it right now to really help pump dollars into the economy to help service debt. In addition to that, they've issued what they're calling FEMA, intended for foreign and international monetary authorities. And essentially it allows Korea to take its foreign exchange reserves and exchange them for short-term liquidity from the Fed without needing to sell off its FX reserves. And if you look at the comparison to what it has, its assets versus its liabilities, it's in a much better shape than when it was in 97, 98. Now, in the short term moving forward, I think what's really most important for the US and South Korea is to build upon this bilateral relationship and really expand and help to use this to expand to multilateral cooperation. Troy kind of mentioned the emerging market crisis that's emerging, and I think that's really, really important to watch for moving forward. Right now, emerging markets are sort of on the front end of both a dual crises, a financial crisis and a pandemic. And both of them really haven't hit as hard just yet, but dollar liquidity starts to dry up, and they're also faced with trying to deal with the pandemic. There's going to be a huge downturn in economic growth in the developing world. And so both countries really need to work together in the G20, the IMF, with particular regard to helping other countries outside of Korea and the United States. Korea is actually, relatively speaking, from on the monetary side, is in a relatively strong position here, and it should be really trying to help other countries really face the threat that coronavirus poses on a more equal ground. And then moving forward, in the long run, there's a lot of unanswered questions about how COVID-19 will impact the relationship, because there's so many unanswered questions about how this will impact globalization, how this will impact rivalry between the United States and China, with potential for further decoupling between the US and China, which we've already started to see. So there really is a lot left to be unknown, a lot left to be sort of discovered and worked through. And I can offer some of my thoughts on that in the Q&A, but I don't want to take up too much time and want to get us back over to that. So I'll end my portion of my remarks right now, and I'll turn things back over to our moderator, which is.
Okay, thank you, Troy and Kyle, for those really informative presentations. So now we will have some time for Q&A from the audience. As I said before, you have two ways you can ask questions. You can click on raise hand, and we will open the floor to you so that you can ask a question, or you can use the chat function to ask a question. So if there's anything you'd like to ask, please do it now.
I just see the first question from Charles Kim. After this webinar, are you going to share the slides with the participants? I think Troy and I could easily do that.
Yeah.
Okay, great. Yeah, and we'll make it available on our website. We'll send a link to the participants. So while we're waiting for, I think there's a question from Michelle in the chat room. She asks, with the decoupling of the US, China, and the outbreak of COVID-19, the US-China relation has been getting cooler. How do you think it will benefit Korea? Maybe one of you could speak to that.
Well, you can go first. You go first. I was just talking.
So, I think that there are sort of specific areas we can look at right now. One, if we look in the immediate term during the crisis, there is a shortage of medical supplies. As Korea takes and largely controls the outbreak of COVID-19 within South Korea, being able to take and shift some manufacturing production to the types of supplies, be they facial masks, which there's a shortage of, ventilators, other things in the United States that the European Union needs that we might be needing in the developing world, those are all forbidden ways that I think South Korea can benefit. Because I think you're even seeing now, like in the UK, for example, there are private comments coming out about how China helped cause this crisis and that they're now sending substandard equipment to the European Union. So there's a situation to where on the medical side with COVID-19 specifically, there are ways that I think Korea can take advantage, not just from the cooling relationship between the United States and China, but potentially between China and the global community. With that being said, we're starting to see an increased desire to shift production away from China. I mean, that clearly was going on during the U.S.-China trade war, but now there's comments of, well, why are we not having more of our medical supplies, more of our key industrial inputs produced in the United States? Because we need access to them in these times of crises. I don't think we're going to see things go that far in the long run because it's not in the interest of either the countries or the businesses to take and shift to basically nationalization of all production, in the long run. But I do think when you start looking at key items, be they, in the electronics industry, be they in the medical industry, being able to build up that production in cooperation with the United States is an area where I think Korea can clearly, take advantage of the situation.
I'll just add, Troy, I think you're right. There's a lot of questions right now about how the global production chains will be structured after COVID-19. There's a big discussion right now on what's going to happen. And right now, everything's sort of set up to maximize corporate profitability, but there are emerging discussions about, well, maybe the global value chain should be reshaped so that there's more of a balance between profitability and managing risks, that you actually have more resilient global value chains. So for South Korea, that could potentially mean less gains from trade, which is really, really important to Korea. But it could also mean in the long run, it might be better off for them if there isn't as many shocks to the global value chains. But to get to the question about decoupling with China, as Troy mentioned, I think that's probably one of the biggest takeaways we'll probably see from this. Countries maybe onshoring or moving to other countries, like a China plus one strategy. China and Vietnam, China and some other country in which they could do manufacturing to sort of manage that risk. And so for Korea, I think that could actually help decrease the trade dependence on China right now. That's one of the biggest issues that the Moon government has been trying to handle with the new Southern policy and the new Northern policy, trying to diversify sources of growth, which also means move away from just relying on China. But as the world becomes more decoupled, I think the concern is if the United States is more, continues to be as assertive in its rivalry with China, it could make it harder for countries to not choose between the United States and China, and it could really put some countries in some difficult positions. I know there are others who think, well, it may actually bring others together and bring the countries together, and I think it's impossible for us to go to a scenario where the United States and China are completely adversarial, not talking. I think there are major non-traditional security threats that threaten all of us right now. COVID-19, sort of the importance of working together on a global pandemic. We're going to face, once this is over, the threat of global climate change. So there are going to be push and pull factors, but I think on the trade side and the economic side, it does raise the risk of it making it more difficult for countries to not pick and choose sides, like Korea, pick and choose sides between the United States and China.
Okay, thank you. Our Chairman and CEO, James Kim, has a question.
Hey, Kyle and Troy, thank you so much for your presentation today. I had a question as it relates to some of the really, really hard hit, industries and companies. As I talk to many of our member companies today, some of them are actually pretty stable, right? E-commerce businesses up, manufacturing businesses up, insurance companies are okay. But the ones that I feel really bad about are the airlines, the hotels. And how do you kind of recover from having occupancy rates of 5% or airlines just shut down, right? How do you guys see that dynamic? Because we obviously have the Korean government working with, let's say, the Korean air carriers, We have the U.S. carriers from the Uniteds, the Deltas, the Hawaiian Airlines, American Airlines. I think eventually we need to have a team solution so that they all can survive and prosper when COVID-19 goes away. Would love to hear your comments on that.
No, I think this is a very big issue. I mean, Korean Air right now basically has cut all but 10% or less of its routes. You have a situation to where the early estimates, and this was just of a minor spread for COVID-19 around the world, suggested that the Korean airline industry would lose $4.5 billion from that. So once you start taking out the airlines, you start taking out the tourists. And once you start taking out the tourists, as you mentioned, that hits the hotels. I think one thing that we need is some type of more common understanding of when travel restrictions will be lifted. I think one of the things that we've seen with Korea's case, Korea did a very good job of tracking, isolating the situation, dealing with the people who had the illness, putting them in quarantine, and really containing the outbreak. But even as things got better in South Korea, we saw more and more countries place travel restrictions on South Korea. And the question becomes, if we're going to take and revive the airline industry, if we're going to revive the hotel industry, the tourism industry, I think one, it's going to take significant government intervention early on to try and cover some of these losses, which are not losses because of poor business planning or anything. This is something beyond the airline, the hotel industry's control. But we need certain common standards so that way people feel comfortable. Because I think given the nature of the virus, unless there are sort of common standards, maybe put out by the World Health Organization or something and backed by all the governments, you're going to see people who are going to be leery to travel. And I think, there'll be certain industries, restaurants might start up slightly quicker and start recovering sooner because, it's easier to maybe do some social distancing in the restaurant. You can have that take place. But when you think about a plane, people are going to sit there and think to themselves, perhaps, it's a confined space. Am I really safe? And that's how you get the tourists in. So I think we really need common standards. We're going to need government intervention. And we really need to sort of think of how do we all work together to encourage people to travel again.
That was a great answer. I can't really add all that much more on other than we just need to continue to pile on the fiscal stimulus to hold us through until we can get to the other side.
Okay, thank you. We had one question from the floor about a COVID-19 vaccine. So I know there's a lot of interest in when that is going to be developed and who is going to develop it. What kind of an impact do you think that might have?
So when it would be developed, I think that's really hard to say. Unfortunately, neither Kyle or I are medical professionals. In the past, if I remember correctly, I think the H1N1 vaccine was done relatively quickly. So hopefully, especially now that we have more drug companies using AI to try and work on these things, and there's actually more, for example, in Europe and with a couple, I think, U.S. pharmaceutical companies, there's an AI consortium to try and find new drugs using shared artificial intelligence information. So hopefully, given the tools we have, we can come up with a vaccine relatively soon. As Kyle pointed out in the data from Kia, that's part of the key to really getting the recovery, because once you have either a vaccine or some kind of drug, it makes people be more comfortable in terms of traveling and re-engaging in economic activity, and then you can open businesses back up. So I think, that's the challenge in terms of, getting the drug out. But I think in terms of impact, it's the key part to doing this, because right now there's talk, in the United States that this could become seasonal, go away in the summer and come back in the fall. But if we have a vaccine or drugs that you can take, that eliminates that potential second economic dip in the fall if that happens.
Yeah, and I just add, as Troy mentioned, he was talking about consumer confidence. I think that's really, really important. That's probably building, what Keynes called animal spirits. That's really what is driving a lot of these economic downturns. People come to us and say, well, actually, if you look at the numbers, the exports or trade should really only fall by X amount, but the numbers are actually always more than that because of perception that's always built into these actions. So if I think the vaccine is probably the closest thing you can get to a silver bullet in this scenario in terms of curing the crisis in more ways than one.
Thank you. We had a question from the floor about the military cost sharing debate, whether the COVID-19 situation might have an effect on that debate. Do you have any thoughts on that?
Kyle is sort of kind of a small expert on this, so maybe Kyle, you want to start off on this one?
I don't think the answer. I don't think the question should be, will it? Because we don't know. I think the answer is should it, and obviously it should. I think right now, amidst everything that's going on right now globally with COVID-19 and domestically in both Korea and the United States, having this issue be a thorn in our side isn't necessarily the best of timing. And Troy and I had actually been talking about this, and Troy wrote a great op-ed in the Diplomat recently, talking about the need to at least push back the SMA discussions, come up with something short-term funding, 3 to 6 months. Once we're settled down, we should come back to the SMA talks, because right now it's a major distraction. And on the one hand, you have Trump coming and asking South Korea for help, but on the other hand, having Esper and Pompeo write that South Korea shouldn't be considered a dependent on the United States when it clearly isn't. So I think there's mixed messaging going on right now, and I think we should urgently rectify that.
Yeah, and the only thing I would add, Kyle mentioned the piece I wrote. I think from the perspective of an alliance, from the perspective of two countries that have a very close relationship, even just beyond the military relationship, that in a time of crisis, some people might say, well, it's a small number of people who are being furloughed and everything, we have bigger issues. But I think in a time like this, it really says a lot about how we as two partners are treating each other, and that we shouldn't be taking and putting people out of work when we don't need to. We really should be trying to find a way to keep everybody in their jobs that we can. And I think, the important thing going forward, yes, we may need to have some changes in how the SMA works, but in a time like this, these people shouldn't be the ones who are suffering for it. So I hope they're able to reach something soon, whether it be a permanent agreement or something short term.
Great, thanks. We have a question from O.H. Kwan from Qualcomm, who heads Qualcomm's business in Korea and is also one of our board members. So he wonders what growth opportunities there might be for industries. 5G would be one example, but do you have any thoughts on what industries might actually benefit from the situation?
Well, teleconferencing clearly is going to be a huge winner. Zoom, I saw, is now, its market value is more than, I think, all the U.S. airlines. So clearly, 5G's ability to be able to deploy it and be deployed quickly is an important part of this. I think one of the things that when we look at this crisis, it's probably going to be a turning point. I think while teleconferencing technology existed for a while, we didn't use it as much as probably people thought we would. And I think you're going to start seeing a lot of shifts. I mean, now you have this opportunity to where, Kyle and I can talk to you from Washington, D.C. while you're in Seoul. And yes, there will be times it will be good to, have some of us come out in person. But I think we're going to start seeing a lot more of these virtual types of events, virtual types of meetings. And so I think, 5G, faster speeds, better downloads, we have these backgrounds, but you can sort of see the, shadow around where this is presented, improving this technology so that it seems as though we're literally there rather than virtually there. These kinds of things I think are going to be sort of big winners, and the tech side of it is going to be an important part of that.
And I kind of mentioned earlier, if we move to a scenario where we have more resilient global value chains, which means maybe not as profitable and would disproportionately impact Korea because it's more reliant on global trade than most other countries of that size. I think the solution to that from the South Korean perspective is really the fourth industrial revolution, and including technologies like 5G. And that really, Korea has really been a leader in those areas. And if it's able to not only implement them in South Korea, but scale them and use them, set standards for other countries, take advantage of that first mover advantage to build those standards internationally, it really could be very worthwhile for them. And obviously the other area is biomedical, biopharmaceutical areas, and Korea now demonstrating that it has this latent capability to develop a test so quickly, and it's really leading on in terms of all these other areas and biopharmaceuticals too, especially as it relates to the conjunction of medicine and AI. I really think that's a huge opportunity for Korea to explore, especially as countries try to figure out, okay, how do we fight off the next pandemic, because we don't want this to happen again.
Well, and even, as we think about this a little bit more, and a lot of this depends on the 5G capacity to get some of the things like autonomous vehicles up and running. But if you look at how people are going about their business right now in terms of getting food and stuff, if you have greater drone usage, if you have more autonomous vehicles that can deliver things to people's homes, especially in situations like this, I think you're going to start seeing a lot more investment in those types of areas to try and deal with some of the challenges we're facing now. And how, if you have a pandemic in the future, do you get things to people that they need quickly, efficiently, and safely?
And I think that, I think our OH coin from Qualcomm, really started us on the right track. Because as I talk to a lot of companies today, sure, there are companies really, really, getting hurt. But I do see a lot of, positive aspects as well. And this is why I think that American companies who have been known to be really innovative can be a real winner globally. And that's the reason why I think, companies like Qualcomm could help really pave the way for the future. So thank you for the question, OH.
Thank you. We got another question from the floor relating to North Korea. So they've been making a little bit of news lately with missile tests and other provocations. How do you evaluate the impact of COVID-19 on the diplomatic situation of the DPRK?
So, here's the challenge. We were already sort of in a standoff with North Korea. They had walked out of the meeting in Sweden. They had essentially refused to talk to us since then. President Trump has tried to reach out. He's written Kim Jong-un. He's even offered help with the COVID-19 crisis to Kim Jong-un. And in essence, the North Koreans have turned away on all of that. Now, that being said, I think we should try to take and find a path forward through the year. I clearly think that their continuing missile launches are not helpful to this. I think it even makes, if the situation becomes necessary to provide humanitarian aid, more difficult, because there will be questions about why North Korea was testing and waiting and holding back on requesting aid rather than doing the things that other countries have done to sort of deal with the crisis. But I think we also need to look at this is that at this point, it's probably highly unlikely that we get some type of, grand deal before the November election. So I think the real question here is there a path forward to taking and doing interim steps that will lead us to, after the US election and hopefully after the COVID crisis is passed, the ability to take and start building the type of dialogue with North Korea that we need to take and finally get a solution to this nuclear issue. It's going to be hard. Clearly there are priorities that the United States and other countries need to focus on right now that are not North Korea related. But I think that we still need to be taking and trying to behind the scenes or to build those bridges.
And I'd also just add the letters exchange between Trump and Kim and then Moon and Kim are really promising. Something like that hasn't happened in a while. And this might provide a good opportunity to restart talks on the grounds of something that is, universally accepted as something that we should do, help each other out in these times of crises. So if we are able to use this, maybe we're not able to get something done before the November election, as Troy said, but use it to at least build us goodwill until whatever happens afterwards, whether it's Trump who's in office in January or Biden or Sanders. At least it puts us on a better footing that we did the right thing at the right time to help the North Korean people, that it could help spur things on come January next year.
Yeah, so I think we have time for just one more question, and this one is on another hot topic. Somebody asked what the impact might be on presidential politics in the US for this year. Do you have any thoughts on that?
So right now, the campaigns have largely come to a halt. If we look forward, the Democratic Party has delayed its convention until August. The hope is that by that point, they'll actually be able to take and bring people together for a large event. I think the 2020 election is going to be a sprint, sort of like a British election, rather than the traditional kind of long, drawn-out campaigns that we've seen in the past. But I also think a lot of the 2020 election will turn on how this crisis is handled. This is sort of the defining moment for President Trump. Is the United States able to deal with the crisis, protect as many lives as possible, reboot the economy as well as possible, and do it in an efficient way? And if we are, he'll be in a much better place come November than otherwise. But I think this will be one of the major issues going forward, but it'll also, I think, affect how the campaigns themselves are run.
I would completely agree. And something that I found interesting recently is that Biden is actually pulling ahead of Trump now in Michigan after all of this coronavirus stuff. And it's important to remember that a lot of this election really comes down to certain districts in certain states. And it seems like Trump has only recently turned the corner from not necessarily appreciating the full extent of what this could be to being very sober about the reality of what's to come. So I'm not sure if this is too little too late. Hopefully we're able to, from a purely non-political stance, be able to tackle this issue. But I think it's really hard to sort of to isolate out the political aspects of it. And I think we'll just have to pay really close attention to how people in Michigan, Pennsylvania, Florida are looking at the president and how he handles coronavirus. And Florida has a very aged population, and if coronavirus grows more and more there, and voters maybe turn out less likely to vote for Trump, it really could swing Florida to Biden or Bernie if they are viewed to being more credible in handling the crisis than Trump was up to that point.
And one last thing I would add, actually, from a technical standpoint, Korea actually could be an important player in this, in that there's the National Assembly elections coming up in about 2 weeks. Korea has taken a certain number of steps to try and make sure those are conducted both efficiently but also safely. If those go off well, we all hope, obviously, that we're not dealing with COVID-19 in November. But if we are, there could be important lessons there for the United States on how to conduct its election if this outbreak is still an issue we're dealing with then.
Okay, well, thank you, Troy, and thank you, Kyle, for a great discussion. I'm going to turn it over to our Chairman and CEO, James Kim, for some closing remarks.
Yeah, just very quickly, I want to thank both Troy and Kyle for this amazing insight today. Obviously, Kathy Stevens for leading KEI, and we should do a lot more webinars, have a lot more frank discussions, and I think that's how we can all learn and improve the situation we have today. So thank you very much. I look forward to seeing a lot more of you in our webinar series every week now. So thank you. Stay healthy and have a great day.
Okay, thank you everyone for the great discussion. As mentioned before, the PowerPoints will be posted on our website for your reference, and we hope to see you next time.